Hey guys, welcome to this video. Today I'll be talking about two stocks that I'm interested in buying if this dip continues to happen within the market. First stock that I'm going to be looking at is Tattooed Chef. So currently this price is $19.24, dropping from the highs of about $25.50 about a month ago. It's seen about a correction of 25%. Just to give a little bit of background information, this is about a $1.7 billion market cap company. They have a 5-year CAGR of about 63%, which Tattooed Chef is in the plant-based healthy alternatives that's focused in the frozen aisle. So they offer things like cauliflower pizza, acai bowls, cauliflower mac and cheese, and things like that. Some notable things that have happened in the past decade: Sarah Galletti, Sam Galetti's daughter, joined as the CCO, which is kind of the person who's involved with a lot of product innovation and the new SKUs within the Tattooed Chef brand. In 2017, Tattooed Chef brand was launched. In 2019, they created 12 new SKUs, which is, if anyone doesn't know, a SKU is a product. And in 2020, they became a publicly listed company. One thing that allows them to have a competitive advantage is that they're vertically integrated. So they're able to control their ingredients and prioritize. So if they're planting, growing, and manufacturing all the crops themselves and food themselves, they're able to monitor a lot more and make adjustments a lot quicker and capitalize on any growth trends that they see in the market for any types of healthier alternative foods. They can quickly integrate that within their own manufacturing facilities, which is going to allow them to react a lot quicker than any other companies, and they just monitor the quality of the food. They don't have to deal with any type of middleman. And this also can be able to increase their margins in the future if they're not going to have to pay for any other products to be imported or created for them. So looking into guidance for 2021, you can kind of see the SKU expansion within the past 4 years. In 2017 they had 2, and they increased to about 8. In 2020 they had 38 SKUs, and in 2021 they want to have 62 SKUs, which is about create 24 new products within 2021. Just right now, Tattooed Chef, they don't actually do much marketing themselves. A lot of their marketing is just through brand awareness in companies like Costco and Walmart, where people see their products on the shelves. That's just kind of how the brand awareness is being created right now. So seeing that their SKUs want to be about almost doubled within 2021, it's great for kind of their own marketing that they're not really paying for. They're just putting more products on shelves, which is going to be good for revenue appreciation. That's going to help with their branding, where they don't do much marketing, is their points of distribution. So in 2020, their points of distribution increased 155%, from 20 to 23,000 points of distribution. Currently, a lot of their stores are in Walmart, Sam's Club, Costco, and Target, and they're expanding to a lot of other smaller grocery chains, which is going to, really add up in the long term, where they're going to get that more brand awareness through their products. And in 2021, they have guidance of about increasing their points of distribution almost threefold to 65,000, and within 10,000 stores. Which again is just, it's huge for revenue growth. If they're not doing any marketing, just having more products on shelves is going to work wonders. I'm just giving 2021 guidance just to give a little bit of background information. In 2020, their revenue was about 148 million, and they're expecting 222 million in 2021, which is about 50% increase. And I wouldn't be surprised if they beat those expectations. And some of the reasons why I expect that is just when you look at their guidance, when they're trying to double their capacity, they're tripling their points of distributions, more than doubling the amount of stores that they're having a presence in. They're almost doubling their SKUs, which are, the products that they're going to be offering to the market. It just, it doesn't really add up why you're just going to be expecting 50% increase in revenue. And where I think this is coming from is that because they're a fairly new company, they don't want to get on Wall Street's bad side. If you give guidance and you're as a fairly new company and you miss your guidance, it's not going to be a good look on Wall Street. I think they're sandbagging their numbers because they just want to make sure they're going to be able to hit their targets. And right now, their revenue guidance is assuming that they don't have any accretive acquisitions, and right now they have $200 million of cash sitting on their balance sheet, and they're about a $1.7 billion company through market share. So you can see how large of a position that really is for them. So I won't be surprised if you see something similar to a strategic acquisition within this year, which will help appreciate the stock price. If like Beyond Meat partnering with McDonald's or Pepsi, those all great news that's going to increase the revenue, and it results in a share price appreciation and just other opportunities to expand within Canada and other international countries. I think this is a good stock to look forward to for long-term investors. Second stock that I'm looking at is Corsair Gaming. So looking at about a month ago, they were trading at about $45, and with the market correction, it's now trading at $31.83 US. It's about a market cap of about 2.93 billion, which is representing with the stock decline about 30%, which is pretty significant when you look at kind of the Nasdaq and the correction it's had. So this one's has a lot. It's been a lot more volatile. So this company is a gaming and streaming company, kind of focused on peripherals like mice, keyboards, gaming headsets, controllers, kind of for the everyday casual gamer. We get to the more competitive edge, so they're gamers that are typically focused in PC, which they may want to buy kind of high memory cooling solutions, like complete systems. They Corsair would create your whole computer desktop itself, or you can just buy cases and you can buy the products to create your own desktop if you want to. So this company is trading at about $2.9 billion market cap. Revenues last year was about in 2020 was 1.7 billion. They're expecting revenues to about 1.8 to 1.95 billion in 2021. They have a CAGR from 2017 to 2020 of about 26% and about 2,000 employees currently. There's a lot of concerns that I see with Corsair Gaming and kind of the gaming industry, how some investors don't really like how there's not a lot of recurring revenue coming from this industry, with how it's kind of perceived. But I just want to add some clarity to that real quick. So as a gamer, I've been playing since I was 10 years old. The way that gaming works is you're going to need better graphics and peripherals kind of every few years. Kind of think of it like a phone. Every update you do on your phone, eventually over time that's going to add up. It's going to make your phone slower, and you're going to need to buy a new phone later on. It's the same thing with gaming. It's becoming more intense every year, and as time goes on, you're going to need to upgrade your computer, your gaming system, and you're going to need to buy more controllers and So basically, as these games become more graphically intense, you require more frames per second. It's gonna result in, just like phones, people buying more equipment. They're gonna buy another gaming PC. They're gonna buy more peripherals. They're gonna buy new controllers that have new enhancement. So it really does have a recurring revenue business model. It's just not on an annual basis. It's within every, I would say, 2 to 3 years, you're gonna want to buy something better if you want to compete at that high level that Corsair is really trying to push. Just looking at their top line growth with revenue, kind of looking at 2018 to 2020, the revenue is about doubled. When you look at 2019 to 2020, they've had a lot of increased revenue due to a lot of people staying at home and having more leisure time. It's kind of been focusing a lot more into gaming, so people have been doing a lot more purchases. Expecting that revenue growth to decline in 2021 just because they're expecting the economy to reopen a bit and there'll be less leisure time, so a little less spending, but increased revenue growth to about 1.8 to 1.95 billion dollars expected. So when you kind of look at this potential market that they have in front of them and being able to convert gamers into significant spenders, greater than $1,000, and you can see in the graph to your right. 2019 total PC gamers were about 524 million. While committed and competitive PC gamers were only 18% of the PC gamer population. So there's tons of room for growth within this company, and being able to convert these gamers into really gamers that are going to spend a lot of money on the peripherals and on the controllers and keyboards and stuff that they want to be able to increase their competitive advantage with all the other gamers. And something that if you're not typically a gamer and a part of like kind of a older generation, it's kind of has a networking effect within this industry. You play with all your friends. You have a group of friends, let's say 10 people, if they're all getting competitive and they're spending a lot of money on their peripherals, and, better keyboards, better controllers that allow them to compete better. It's kind of has a networking effect. Like if all your buddies are buying all this expensive products, they kind of nag you in this game too if you're not keeping up with them. you know, do your job better, and it's going to result in more revenues. You want your whole friend group and buddies that you play with to be on the same level. So the knacking and the chirping that kind of goes on in games is going to result in people wanting to have a better competitive advantage over the casual gamer. Just looking at 2021 outlook, the revenues again, they're expected between 1.8 to 1.95 billion. If you kind of remember back to where the share price is at right now, it's about $31.83. It had adjusted earnings of about $1.60, which has an EPS of 19.9, which is fairly fair valuation right now, especially with the market we're in. If you're looking at their forward 2021 outlook, and you kind of break that down, their margins for net income margin, it's going to result, assuming they can keep their ratios the same, in between $1.69 to $1.83. So forward-looking earnings is going to be from anywhere of 18.8 to 17.4, which is a very fair valuation for this company, and an almost undervaluation considering the revenue growth and the potential that this company has in the future. I think as far as revenue growth, it is kind of small, but when listening to their conference calls, I wouldn't expect much of a beat within their revenues. I think their expectations are going to be fairly spot on. And the reason why I say this is because one of the questions that came up in the conference call is that some guy asked, what if demand was a lot higher than expected? Well, they said that the people that they're buying their products from, manufacturing facilities, they're kind of backlogged in orders, so they put their order in ahead of time, and they're really not going to be able to get more inventory if they need it quick. They kind of had to put it ahead of time, and as they're expecting the economy to reopen in 2021, their revenues that they're expecting right now, they purchase their inventory in expectation that they're going to sell that much. So if demand is a lot higher, the economy doesn't open, I wouldn't expect much of a revenue beat, just because they're really not going to be able to get that inventory to beat it. But it's definitely something that I'm going to be continuing to buying as it gets lower. And that wraps up the two stocks that I'm interested in buying. If you're interested in buying any others, feel free to let me know. I'll be interested in looking at them. Thanks.